So I'm sure that there is some cost, right? Like there must be some maintenance cost or there must be some regulating cost, even if it's by what I read, it was by National Corporation of like Payments Gateway by India, by RBI, in collaboration with RBI. So then how are they doing that? If it's an completely open source, so tomorrow if I have some problem, so who is dealing with it? So there must be something who must be paid, right? So how they are dealing with it?
Yeah, so that is funded by GOI, right? So what the government of India is saying is that technology is free, the basic technology, and then you build your app on it. So SBI build that YONO app on it, or whoever is using UPI. So now I can do UPI through Paytm. So Paytm is using the UPI interface, but say if they use Visa, Visa charges them. So it's like
Yes,
you know, you have heard of Swift, right? So
Yes.
what is Swift? Swift is basically Society for Worldwide Interbank Financial Telecommunication. So basically, it is a way where banks can talk to each other and also do funds transfer, etc., etc. Now that is a proprietary technology owned by that one company, and they charge you fees for that. Here, because it is owned by the government of India, they are saying that fees is free for you, and you build. So we give you the basic source code on top of that. You build on it. That is what I understand about UPI. If somebody has more details, they can talk. But that is what I understood. So now, based on that, because it is free, everybody came on board. So Paytm, you can use UPI through Paytm. There is another one called Bheem. You can do UPI through that. Phone Pay, you can do UPI through that. And I think most of the banks are also allowing UPI. Amazon Pay, you can do UPI through that. That is more than enough. Four options are more than enough, but I think we have 40, 50. Free charge,
So that
MobiQuick.
so that means now, like before when we were paying at the payment gateway, like that POS, that means half you said that some portion was going royalty and some portion was going to the bank as charges. So now when we are using UPI, the bank is getting no charges, right? So why is the bank promoting it? So they are at a loss in this, right?
Yeah, so the bank is being forced by the government of India to do it. So the government of India is saying every bank has to do it. That's how they are pushing it, because they are saying we have given you the technology for free. What will you charge for?
Nishant, one thing I
So
noticed is
basically,
UPI always.
what they are saying is, say for example, hold on one second, Ranjit. Let me answer this question, then you can add. So what they are saying is, say for example, I am my account is with Citibank, and I am paying to Akash, who has an account with HDFC using UPI. Neither Citibank, neither HDFC Bank is paying single rupee charge to use that payment gateway of UPI. Okay. So a Citibank customer is getting the benefit of using the API gateway to transfer money from my Citibank account to your HDFC Bank account. Reverse way, when a HDFC Bank does, the money comes. Now the government is saying that when the money comes from Citi to HDFC, it is coming to somebody's savings account. You are hardly giving anything to the customer, right? So you are anyways making money on that. That spread you are anyways making, right? CASA, right? So the banks love to have money in their CASA. So earlier when the technology was like NEFT or RTGS, that was probably owned by a group of banks or whoever. So they were charging each other. So it's like if HDFC Bank 100 customers make 100 transfers and HDFC Bank charges each of them 5 rupees, 500 comes to them. But similarly, then Citibank charges. So net it nets off. So it's they are saying that whatever money is coming into HDFC Bank via UPI per day and whatever is going out is kind of similar. So why should you charge? Anyways, you are keeping that money, na? So, and there must be other levers that the government is pulling, which I am not aware of, but there are many levers that the government can pull, because at the end of the day, the banks want to make money from whichever source, but they are anyways making money on their loans, right? They have their spread. So for
No, yes,
example,
of
today,
course, but this was the one of their biggest source, right? Like we always discussed it with when we were discussing the banks that they try to push you for like having credit cards, this that they
no,
were
no,
trying to
that is
push.
different, right? Credit card में अलग business model है ना, उधर they make money in another way, right? So credit card is still open. Credit card they are doing personal loans, they are doing other products, right? So there maybe they might have increased margin by 0.1%. Who knows? So the spread maybe they were keeping, like earlier if the cost of fund for HDFC Bank was 4% and home loan was at 8%, now maybe they are 8.1. So we don't know that spread how they have adjusted, or 8.05. Even 0.05 makes a lot of difference on a large volume. So they would have done their calculation, but on the UPI per se, they have kept it free. There are some noises where some people are saying that we want to charge, some banks are saying it's under negotiation. But this is part of the Digital India initiative, right? Because the more digital payments happen, it's easier for the government to track and collect higher taxes. So for example, the government's business case is that by doing all this, if they can collect 10,000 crore extra as income tax, the cost of maintaining this whole platform is only 3,000 crores. That's working out fine.
Okay. Yes.
Nishant, this is Arun. I just have a quick follow-up question on, I don't know who the last speaker was who asked that question. So I would actually just want to know, like, if the banks are not charging for it, but there are some transactional costs, some manpower costs, some system costs that the banks are still incurring. So how do they cover those?
The question was asked by Akash. This question is for me or for Akash or for whom?
For you, Nishant.
Yeah, so they are covering it as I said, right? They probably have increased the spread on their home loans, personal loans, or a plethora of other products that they offer. Or maybe they have an understanding with the government.
Yeah, but I think within a big entity, whether it's a corporate or a bank, every business division operates as an individual entity. So every entity has to maintain their own P&L.
Correct. So they must be pulling some levers, right? That's what I'm saying. Maybe they are working with too less manpower. There's a lot of flap also, right? If you are talking in that level, there's a lot of flap. SBI has 260,000 employees. I'm sure it can work as efficiently or better with maybe 30% less employees and slightly better use of technology. Right? So there are a lot of levers that can be pulled, right? That's the discussion. That's the direction of the discussion we are taking. So as I'm saying, this is being driven by Government of India, and I just explained the business case that Government of India might have looked at. But the whole objective is that they want a more digitally focused country, where they want to encourage more use of digital payment options and less use of cash. And the one bottleneck was that net speed was not there. But now everyone has a, by and large, everyone means a very large proportion of the population has smartphones and fairly decent data connections which allow you to make the payment. So in general, a UPI payment is done within less than a minute and no hassle of cash and all. Earlier, if you make 100 rupees and your purchase was 35 or 36, 64 change ढूंढने में ही 2 minutes लग जाता था. So it is faster, and because of now one demonetization and now Corona, people don't want to touch the cash. So anyways, the adoption has increased. In a lot of times, people are ordering from home, so that their wallets help a lot. Like 5 years ago, I don't remember exactly, but 5 years ago, I probably didn't even have a smartphone 6 years ago. And 4 years ago, I didn't know about wallets, and now I know about 10 or 20. And at one point, I had so many wallets, I had to uninstall few because it's so messy to manage so many. So now I manage one. So that's how it is. Does that answer your question?
I would say to a certain extent, because I think in the answer there is quite a lot of maybes and mights, which I think is kind of leave the premise a bit vague. So I worked with a couple of payment service providers in Germany with a couple of startups that I was working with. And while the visa charges, as you mentioned in your example, certain fees, there is always every participant who's there as a commercial entity will always charge some kind of fees. And I'll be very surprised. So I actually left India about 7 years ago. So this whole online payment gateway kind of a system kind of took off after I left. So I honestly don't even know how Paytm works because I never needed to use it. But my understanding would be that if there is a commercial engagement, whether that be government, whether that be a public sector bank, definitely for private sector banks, there would be some kind of fees. It might be just built into the pricing. So customers or the users might not recognize it as separately, but there is definitely a component of cost involved.
No, definitely right. So I'm little not clear with your question. Definitely there is a component of cost, but as I said, right, they are probably compensating it somewhere else. Exactly.
Yeah,
so when you said
I kind
maybe
of
I
disagree
don't.
with that premise because in bigger companies, for example, the loan division is different. So they are responsible for their own P&L, while the credit card division would be different, housing loan will be different. So every division has a business head who's responsible to present their business division's P&L to the management. And I don't think any credit card guy would be happy to take on the cost for some other business.
Correct, right? But there must be something coming from the top, right? I see you are talking about internal divisions within a bank, but there is still a CEO running it, right? So if the CEO says, yes, fine, you eat up that cost, you eat up that cost, right? And
yeah, so I would say that's kind of an assumption.
Yeah,
Based on my understanding,
it is definitely an assumption, but like so coming back to the case of Yeah, coming back to the case of Paytm, right? So Aditya Puri, who's the outgoing CEO of HDFC Bank, made a comment about Paytm that he doesn't know how they will ever make money. But then, if you see today, the core payments infrastructure of Paytm may be bleeding, right? And it is VC funded. So you can pull the data whenever it is available. Paytm is in big losses. But then they have a Paytm mall. Now they got into financial services. So they are going to compete with Zerodha in the broking space. They are selling insurance. They are selling mutual funds. And I believe last time I checked, they are selling 20 crore worth of mutual funds a day. So these are the alternative ways that they are trying to find money. They have a Paytm payments bank now. You can deposit money in that. So there's a lot of things. And then earlier, what people did is they could add money from your credit card and then pay some other credit card bill from that. A lot of those loopholes were there. They plugged that. Now, in your Paytm wallet, more than 10,000, if you try to add from your credit card, there is a charge for that. So they have brought in some charges. So for example, all this Swiggy and all, they were delivering for free. Then they put in a 20 rupee charge and a 30 rupee charge. Now they are like charging 40, 50, 60 rupee charge. So yeah.
Yeah.
So
okay, I think we can carry on this discussion for quite a long, but I think there is, since I'm here for
no,
the first time, I was just kind of
that's good
pitching in
actually,
with my
right? So
thoughts.
that this is the model that we follow. We actually
Okay.
encourage questions because this helps everyone to learn more. So that's fine. But anyways, and because one of the key presenter is missing, and I think it was his turn. So Ishwar, Ranjit, you both are part of the visa team, right? So shall we start or what do you guys want?
Yeah, sure. There is also Sri Hari. He was presenting last time
Okay.
a part of Weber's presentation. So I think we can carry on from his perspective right now.
Sure.
Is
So
that okay
you,
for you, Sri Hari?
Yeah, I will go ahead. Thank you.
so it was on page 2 we were, right? Yeah. So we can continue from there. Anybody has any questions from where we left off last time on visa? So you can ask and the team can answer, or we can continue.
Okay, if there are no questions, I will continue. I mean, as we all know, we are discussing the visa, and here the objective is to do the fundamental analysis and arrive at a decision whether to buy or sell this stock. As part of that, we already started the initial presentation where we covered the history of Visa, which was covered by Vaibhav. And due to his unavailability, I continued from there, and I'm taking this part where how the Visa makes money over here. As I touch base to most part of this in the last week sessions, anyhow, I will again give a small brief, and I will resume from that point. As Visa is an kind of a network which which is an which issues their network to the issuer, and the issuer will be able to issue that card to the cardholders, and in turn the cardholders will be using that card to do the trading in the at the merchant locations, and to for that service or for that goods which is being purchased by the cardholder, the merchant receives the payment in his bank account, whereas this complete circle which the merchant and the cardholder and the issuer, and there is another party involved here, which is acquirer, all this party through all this parties which are involved here will have will apply a certain fees for these transactions, and therefore certain fees for using their services over here. In turn, it is more like the merchant who is the person who is selling his goods or services, and in turn he is making a profit. For example, if he sells a good of 100 euros or $100, whatever it is, in whichever currency it is. So, for example, for that he might be making some 4 to 5 euros as profit. So that is where his business case is. So for him, his core business is to sell the products or services. And in turn, if the cardholder is not having upfront the cash, so he will be utilizing the card services over here. Which will be where the Visa network will be one of the one of the network where the cardholder can use their services. The cardholder can use the other services which are available in other networks which are available in the market. But here our focus is more about Visa, because we would like to analyze the Visa company's stock right now. That's, I mean, in the end, the business cases, it's a mostly the Visa, which is having a huge market and huge merchant network connection and huge terminals where this cards has been accepted. So they make an huge profits and huge and also it's interns. They connect the customers networks, and also they connect all the services in the country, and or from one country to the another country. That's where the core model of Visa is. But yes, they are into some other products, but currently that is the major product which Visa is into. Ashar, Ishwar, can you go into the next slide, please? If there are any questions, please you can ask me. Yeah. Then coming to the core businesses here, as I already mentioned, it's already the core products are it enables in accessing the cards throughout the merchant locations. They have around 61 million merchant locations throughout the world, and around 3.4 billion cards have been accepted. Visa cards have been accepted in this merchant locations, and they are into a very good. They have very good products, like there are Visa Pays, and there are V.me. There are different products which Visa has enabled as per the necessity of the consumer, and as per the merchant's necessities, and as per the consumer necessity. So there are really huge products which Visa has, and it also sometimes they build up some products based on their merchants and consumer basis also. And mostly it is into e-commerce growth, and they are also into the partnership and the venture. They also are ventures in a lot of the companies where they want to increase their footprint in different geo locations, even in EMEA and also in Asia Pacific regions. Then we can move to the next slide if there are no questions here, please. Yeah, the most value-added service which they are doing is, that's what I mentioned. It is a kind of an more merchant and acquiring solutions. They are connecting the merchants and the consumer, and in the end they are moving the goods and services from each party is getting benefited, and that too security is one of the reason is primary concern, where everything is addressed over here. And apart from this, Visa has a very good fraud management and security capabilities, and also it is a kind of a tokenized way. There are a lot of because once the data moves from leaves from Visa network and it reaches the third party network and other things, so there are really a kind of an a lot of tokenized methods being followed here. They have very good security features also in place to avoid any threats for them, which we will cover in most of them in the SWOT analysis, which we will do. Again, here it's more the Visa is about its foundationals. We would here Visa is having around employees of around 20,000 employees throughout around 70 countries, I guess, and it interacts and it has really a lot of products, and it is having around a good number of it is connecting a lot of financial institutions with their products. And that's what I was talking about, Visa Pay, Visa.me, and there are a lot of products which are enabled for the merchant and the consumer specific needs and services purpose. It's more about the products and how Visa is connecting with the financial institutions here, and it is enabling its core services, that is the network, to connect and get the services done between the merchant and mainly for the consumer and for the merchant purpose, merchant needs. Yeah, we will go to next slide if there are no questions here. Yeah, as part of the competitive analysis, what we thought is we will quickly do a kind of an SWOT analysis where it's more like strengths. We would like to discuss the strengths.
1 second, Srihari. So,
Yeah.
guys who are new, you are free to ask questions, okay? Please feel free to ask questions. It's a very open group, and we, in fact, encourage a lot of discussion and dialogue. That's how we all learn from each other. Because all of us have different levels of experience in the markets, but definitely none of us knows everything. So we are happy for different thoughts, constructive criticism, everything is welcome. Kind of, yeah. As long as we are not abusing each other, I guess, other than that, everything is fine.
Yeah, please. I mean, I also encourage to ask questions. I mean, I'm also in this group with just 4 weeks now. So this is my first presentation in this group. I'm not involved in, I'm just going through a lot of basics here. But if there are any questions, it will always be a learning opportunity for me also. Please go ahead and ask. Just if there are any questions till now, if you feel I skipped something, or if I gave it in a nutshell, I can enhance it more over there.
I have one question here.
Yeah, please.
So maybe I have afterwards we are discussing this point, okay? But the question, out of the few services which you have mentioned about, which are the ones which are like the recent ones which Visa has done? Like, can you tell us like what is the new things which they have introduced? Can you just highlight that, or maybe later?
Okay, I mean, see, I mean, it's more about Visa products. Actually, I'm also into this networking area. I mean, from my knowledge, what I mean, I haven't prepared for this, but I know what Visa is into. There are a lot of new products which Visa launched recently. Which I was talking about, V.Pay and V.Me. These are the certain specific products which are enabled on for certain platforms, actually for certain merchants to process certain kind of data. I am not completely in depth looked into this products, but I supported enhancement of some of this Visa products in my project.
So what is this product do? What will this product do exactly?
Okay, I mean, it's more like Visa Pay is like which it will enables, for example, like Apple Pay, it enables on the Apple devices the transactions will be done. So that like that, there is another network where this Visa pay transactions will be accepted.
Okay, so then like so it would be like an application, something like an application, right?
Yes, I mean, for example, let me put it this way. For example, you have Visa rupee card in India, right?
Okay. Yeah.
Right. So you have Mastercard. So like Visa itself has different cards in it. Like Visa Pay is one card. It means in throughout it's a kind of a debit card which has been issued for the entire Europe location to do a kind of a single euro payment. There is a kind of an SEPA which they call, which was enabled recently in 2016 in European 2012 to 2014 in that years, where they enabled a single European payment area where all the transactions which are done within the Europe location, a single format will be used for that.
Okay.
So these are
Gosh,
all
maybe
kind of an please
But
go ahead.
maybe Shriyari, if you know about 3D Secure, 3D Secure, I think you already worked with 3D Secure. Perhaps you can talk about 3D Secure. You know about 3D Secure, Shriyari Sama?
See, 3D Secure is an online e-commerce payment transactions. I mean, card transactions, where it involves a kind of an cutting-edge technology solutions. I mean, it's more additional security layers are possible here. It's done more on the e-commerce transactions.
Maybe
Is
I
this
can add some more.
is this product of Visa 3D Secure?
Yeah.
Yes, there is also Visa 3D Secure. That's what I was telling. They have really, from my experience, there are around 30 to 40 products like that. Visa has different cards they have.
Actually, it's from itself, Akash. Actually, in such an institution, there's normally what they do is they will come up with some kind of protocol. They will make alliance with some of the payment giants, and Visa is the leading guy who make the alliances with other payment portals, and they came up with this common standard portal where all other payment gateways can access securely. So they implemented recently in Europe. I don't know in India it's implemented yet or not.
Okay. No, my question was more towards the to see that how they are trying to compete with this something called as what we have as UPI. So I wanted to know that are they
See,
to
actually, everyone believe that if the customer, so if the new product comes to the customer itself, a new product, actually the business not run like that. Especially in the finance institutions, uh, if you're launching for new products every year or something, it doesn't mean that you are profitable. There is a business to enable all the new products to go in a secure channel. That's where Visa is focused. So that's what I am stressing in other sorry, in the previous call also. So
if
don't
your
assume
business
Visa is consumer face. They are
if you are
into business to
going
business.
down, but if your business is going down, let's imagine that one more competitor comes up with another completely different business model. So then what is the point of having this all this 3D secure and everything? If your number of customers are decreasing or if it is going down, then there is no point of having this 3D secure and everything, right? You
See,
are
maybe tons of competitors coming up in the front end phase. Many new startups are coming up, but everyone has to bypass the 3D secure. So they will be end up paying some small piece of chunks to Visa.
Mhm.
So it doesn't matter how many stars. See, fintech as such, recent years, maybe if you see 5 6 years, fintech there are many startups came up into the market, but everything doesn't go independently without interfacing with each other. So Visa as such, so for example, one of the services what I'm talking. So these guys will always have some kind of chunks. So the big players will be always a big fish so they will always eat up the profits. Doesn't matter how much competition or how much new faces are coming. So Visa is also not interested to be in the front facing. They are interested maybe, but that's not their primary goal. Did you see any like a Visa Pay as such? Visa will do incorporate with all other when other apps, but they don't involve as just a completely from Visa itself. So for example, they make a tie-up with Apple Pay and also a Google Wallet. So they will tie up with a both. They will provide the portal to them. That's how it works. So if you are comparing a Paytm or any other who is a front-end face, these guys are not the one to compare with them. And
Okay. So my
and their
question was
stock,
more towards to see that, yeah, we all agree that it is a good company and it has done a lot of good things, but the question's focus was more towards to see that what will be they delivering in future, what is their future prospects, like why someone invest today in Visa and not some other this thing, why, what is their future prospects? That was my basic question. So okay, but I understand what you're trying to say, so yeah, we can move ahead. It's clear.
actually, if you want to know about their innovation, they are into many things. Actually, they are already working on IoT and messaging platforms and also blockchain. So they are already working on cryptocurrency. So everyone will assume that if you are release a no, I'm just Akash. Just want to clear because I think you are not from the IT perspective. Everyone thinks that if you release a product to the market, that's the where the profit is. It's not. Microsoft is doing business by just selling Microsoft Office Excel from past 20 years. They are into cloud, they are into Office suite is the major revenue for them. So no one will think as a business ERP or enterprise solutions are the one which has more money. So even in the cash payment sake, this guys has into completely into enabling the businesses, enabling a payment gateway, other card provider to make the businesses. So
No, I do
if
not
you
agree
want to
that
know the
when you say Microsoft, today Microsoft is not just selling Microsoft Office. Today Microsoft is into different fortes. They are also into like this cloud data. They are also into, they
yeah,
entered into mobile business. So they are not just
actually
selling that. And also whatever Microsoft, like Windows 98, and today if you see Windows 10, every year they are giving an upgraded version. So today
do you
what is
think
the
Microsoft
like,
do you think Microsoft Office profit versus operating system profit is more? No. And one more thing, Microsoft, I talked with Microsoft colleagues itself, the amount of money, how much they used to get revenue from the if they release a Microsoft operating system to the market, the profit they were making in the Office suite was more. If the Android customer install Office in his phone, it gives a more revenue than a new guy buy a Microsoft phone because it's cost a lot of money to Microsoft to maintain our mobile operating system. It's just so much difficulty. So Office suite is a very big industry. No one knows this one. I can challenge this one if you want. We can open pull out the numbers also. I already seen the Microsoft and they are into cloud now, majorly focused. They are into basically they want their service provider. That's what I'm telling you. They are service provider. They will give subscription. That's it. They are not giving any whatever IT new products like a innovative products like for example Facebook as such. They are not involving any new products to the market.
Guys, if I can just pitch in. Uh, Sorry, I did not get the names of the people who are presenting and who was just answering.
Akash is the guy who asked the question, and myself, Ranjit.
Hi, Ranjit. Great. Ranjit, this is my first session, so pardon if I just kind of give my very candid thoughts. Um, I think the focus of the group is to basically just identify good opportunities and understand the business model to a certain extent. From a business model perspective, I think the discussion is a lot more about the technical aspects, which obviously I think understandably most of you guys are probably coming from IT background. So that's where the domain is. But I think I totally agree with Akash's premise. See, the thing is that while Visa might be big, and I think you're also based out of Europe, so you know N26, you know Koya, you know Autonova, all these small startups which are coming in, they're just eating up these big guys' lunch overnight, right?
Yeah,
And
sure.
26, yeah, N26 just dominates the whole market in banking, and they have just shook all the big banks. So what the Visa is doing and all the big players are doing is basically just catching up. You dropped a lot of buzzwords like cryptocurrency, IoT, and all these things. They are basically adopting this now because they see the value. Because the startups have captured the market, which they just ignored till now. And I think this is one thing also, because you have the SWOT analysis here. One thing which is missing from your threats, which I would have loved to see, is the threat which is coming in from new startups, which are basically just very agile. They are very quick to make decisions and move on a particular market and a segment and just basically corner that whole segment. So if you know, in Germany, all the banks, and I think there is something similar in Switzerland also. In Germany, it's called Pay Direct. I forgot the name in Switzerland. So all the banks came together and they created their own network for payment services. Now, this I think is the major threat for Visa, because what the good, or I would say the smart companies have recognized, is that providing one service is not enough today. Like you mentioned for Microsoft, and the same, I think Apple is a very good example of that. They've created an ecosystem. Now, everything that they provide, Apple controls, whether that be music, whether that be videos, whether that be operating system, device, hardware, software, apps. They basically control everything in their ecosystem. And this is something the banks are realizing, which means that players who are offering just standalone one service are at a big threat. And I think we have seen that with Walmart, what Amazon did to it. We have seen that with Tesla, what they did to BMW, Mercedes, and all the other players. And finance, most of the guys might not be aware because, as you said, they are more in the B2B business. But if you see, if you remember Wirecard, the company which went bankrupt in Germany, they are building up things and services which I think will really disrupt the current businesses. So coming back to the financial part of your whole purpose of this discussion, with that threat of competition from big and small players, how would you see, based on a fundamental analysis, as Visa being a potential, if you have to put like 1,000, 2,000, 5,000 euros in Visa stocks today, would that be something you would be comfortable doing?
No. That will be kind of the end of the discussion. And Arun, excellent points. And I kind of brought this up last class where you were not there. The same threats of NPCI. So yeah, so let's see what Aranjit has to say. But good points. And please be candid. We all can take criticism. And we are also good to give it back. Because your turn will be there to present, and then Ranjit will be ready.
Sure.
Arun, I am basically from Germany, and I work in a bank, in one of the bank in Germany. And just for your information, I have Targo Bank.
Sorry,
so I have implemented
Targo. Okay.
Yeah, I have implemented a front end for a Pay Direct portal in Targo Bank, and also Bargeld service. You might be knowing cashless Cash 24 solutions. It's based in Berlin startup. Basically, they generate a barcode and they go to supermarket and they will do a transaction. Have you know the price of Bargeld transactions? There is a money for that also. Bargeld, it's also cost money for the customers. You might be knowing this one. For each deposit or withdraw, there is a charge. We charge bank. As a bank, we charge it. Do Visa charge you? No, they don't charge you money. You don't see the fee.
Yeah, I would just dispute you there. Visa cannot, no business can sustain, first of all, without charging anything. So they definitely charge, whether they charge the bank or the restaurant or the supermarket where I'm paying, but I'm definitely paying for it. Trust me.
Yeah, they charge, but they don't charge you. That's what I'm telling you.
Yeah, but
that is
right?
What is
they
the
will just increase the price.
See, the thing is, whenever a business says that they are not charging or you're getting something for free, for example, I'll give you a very simple correlation. You buy a fridge from Amazon And for example, in Europe, if it is 500 euros, and you go to the Saturn or the MediaMarkt, which are the supermarkets for electronics, you buy the same fridge for 500 euros. Saturn and MediaMarkt, they will definitely, plus also Amazon, you don't pay anything for the Visa service. But that 500 euros, there is a very sophisticated pricing model which takes into account each and every cost down to a cent, which has been built into that pricing model, based on which they come at a basic price, and then on top of it, they negotiate the margins with, for example, if you're buying a Samsung fridge, Amazon negotiates like a margin with Samsung, same for Saturn and MediaMarkt. So please don't assume that if someone says you're getting something for free, you're getting it for free. Nothing in this world is free.
Yeah, I agree. I know what you're telling, but this is directly charging from you. I work for as employee, I am getting a free service. For example, bargeld service is barcode. So you can see the charge, like for 100 euros, you will be paying end up with paying like 30 cents, 40 cents. So we are showing the fees to the customer itself. So you can imagine how many transactions it could happen per day basis and how much they might heat up. Coming to, and for example, N26 is nothing but a neobank. It's a completely digital bank. It's nothing special. They don't run a filiale, so they are filiale means branch. Sorry, it's a German word. So they don't run a branch, so they're more profitable than a normal banks. And you were saying N26 taking up. Do you think, being a German, do you think they will keep the deposit in N26? They won't. They might use it like they might load it like 100 euros or 200 euros per month for getting the fancy Apple car.
Why? Ranjit, just tell me one thing. N26, in its all history in the last 5-6 years, they've raised, I think, close to 250 million from very, very sophisticated investors. Why would any investor give them money if they don't have a viable business? If I come to you and I ask you, give me 50 euros, I'll give you financial advice. How many times would you think before giving me those 50 euros?
Arun, so just one thing I will dispute here. Rest of the things I agreed with you. When you say sophisticated investors, right? So if you look at the VC industry, out of the 100 investments they make, maybe 7 or 8 are successful, right? The rest are go kaput. So that's the industry, right? So that's not no parameter, right? So N26 could be out of those 92 that will fail.
Nishant, I think just to inform you, N26 is, I think, more than $1 billion valuation right now.
Yeah, but look at WeWork, right? Look at Uber. Need I go on? How many failures are there? Tesla,
and
Tesla is like going like crazy.
Nishant,
but
to be very honest, that's a very unfair comparison, because in WeWork and Uber's case, there is no regulatory authority. In a financial services industry, you have to first in Germany get a BaFin license, which is first and foremost the license to even take deposit from customers as a bank or a financial institution. And then on top of it, as a financial institution, I think this is one of the most regulated industries in the world. So the only way you can scale is when you're providing something which is disrupting the current market.
Arun, this is Ishwar here. How is N26 different from Revolut?
Okay, so I have not really used both of those services. I'm still a very traditional guy going to Deutsche Bank. But from what I understand, Revolut is, I think, more of a money transfer service. I'm really sorry, my knowledge on Revolut is very limited because I think it's based out of UK. N26, because it's just based out of Germany, I have a lot of friends and colleagues and people I know who use N26. N26 is actually a bank. It's just an online bank. So it's a bank in every aspect of function, except for the fact that they don't have physical branches. So it's an online bank.
Okay, because I'm using Revolut right now, and it's not considered a bank per se, according to UK financial laws. But I do have an account number. I mean, anybody anywhere in the world can transfer money to me with my SWIFT code and IBAN
Sure.
code.
Yeah.
And I can also use it like a wallet to purchase things online or anywhere. In fact, I use it daily.
No, Ishwar, so I will answer that
yeah.
question. Revolut and N26 and Paytm, these are all online digital banks. Boursorama in France, these are all the same.
Yeah, but
So what?
Boursorama is not considered like a Revolut. It is actually a real bank according to French financial
Yeah, so some of these
regulation.
have not got full banking licenses. And even N26, I don't know. Generally, in most countries, there is something called a deposit insurance. So say, for example, in India,
Exactly.
you keep
Yeah.
1 lakh rupees in your savings account. Across all your savings account, only 1 lakh is covered, something like that. In US,
Yeah.
it is per account or something. They call it FDIC. So I don't
Yeah.
know whether these banks have that covered. So definitely Revolut does not. Boursorama, I don't know.
No,
What are the
actually,
French?
in the Revolut, it's different because they are not lenders. So when you put in money, it is actually locked in their account. You always have access, 100% access to your money. Let's say if 10 people put in 100 euros each, the total money in their account will be 100 times 10. Whereas in a typical bank, they lend it out to other people. So they will never have the amount you put in.
I don't know, but these guys also should be doing something with the money. Now, if they are not lending it to someone else, they must be giving it to
No,
some other time,
no,
some other
they're
bank.
not Revolut. They put it into,
Yeah,
I
they
guess,
must be lending it
secured
overnight to
bonds or
banks,
something.
right? They must be putting it into banks overnight and generating some interest, right? They won't keep it for free, and they probably give you nothing.
Yeah.
So,
Nishant, I
and
think I can probably add on this.
Arun, to answer your question, yeah, just 1 minute. I have just one point to add. I think what you were talking about as a payment service, it's more of TransferWise. So you were talking about TransferWise. So
Yeah, correct.
TransferWise is primarily a payment service based out of the UK. But as
Correct.
Ranjit was saying, right, even new banks or digital only banks, whatever you call them, right, they have multiple risks, right? One, the barrier to entry is very less, right? Anybody can start a digital bank. Then how will they monetize it? So is the N26 profitable? I doubt it, right? So there
Okay,
is,
Nishant,
there is,
I would just kind of dispute that again. I'm really sorry for that. First and
no,
foremost, the barrier
not
to
sorry.
entry to
If
the financial industry is one of the toughest because of the amount of regulation and compliances that you have to do. Just having money and just having investor and a IT product is not sufficient. You have to, from a government's perspective, take approvals from something similar to RBI in India and the finance ministry before you can even start to take money from the customers. And that is especially more so for Europe. So I think it was Ishwar who has a Revolut account. I totally agree with Nishant on this. Please check with Revolut if your deposits are actually insured federally. So in Germany, they are insured to an extent of 100K per account, per person. So if you have more than 100K and tomorrow the bank collapses, so your money up to 100K is insured by the government of Germany, right? So this is one of the biggest things which differentiate a bank. Forget the physical form, whether that's a physical bank or an online bank. But if they have complied with this, then they are a proper bank because they have complied with all the banking regulations for the country. And okay, I'll just come back to the basic of the question. My whole intention was not to get into this debate of banking and profitability. What I was kind of curious about, and I think Akash
no,
was the one who asked that
Arun,
question,
just one thing here,
was,
huh? So
yeah,
everything is fine. It's not a debate, right? It's a discussion. So that's okay.
of course, of
We don't
course.
never
Okay,
get into debates. We are always into discussions, and it's fine. People have
okay.
different point of views because I kind of raise it in every forum. Nobody's
Mhm.
trying to win here. It's a discussion and everybody's sharing their views.
Perfect. Appreciate that. I'm just like a bit more conscious probably because I'm here for the first time. So I don't know what the dynamics are. But coming back to the basic question where I started off with, personally, we have seen that tech has basically kind of reshaped each and every industry that they have gone into. So my question specific to Visa was, I don't know if it is going to come from digital banks or fintech companies or somewhere, but how much of a threat this this evolution of technology into financial services would be a threat to Visa. So that's what I'm basically coming back to.
Arun, just a small information here. Can you tell me how N26 business is related to Visa? How N26 can kill the profit of Visa? Can you answer this question?
Being a tech company, just exactly how Amazon screwed every physical retailer, because they are relying on technology and not on their size. Visa and MasterCard right now relies on their size. So you very nicely mentioned that and very appropriately mentioned that they just want to be on the back end. So they just integrate with the existing customers. And this is what is saving them right now. Tomorrow, those existing customers, see, it's a business. Visa charges them 2%. N26 or X company tomorrow charges them
Arun, just
1%.
one thing, right? So here, aren't you contradicting yourself? Because just a few minutes back, you said in finance, the barriers to entry are very high. And a few minutes before that, you rightly mentioned that. And you rightly also mentioned few minutes back before that finance is one of the most highly regulated industries compared to healthcare. So comparing Apple's success in the Amazon's success in the retail sector, which wasn't as regulated, right, to other industries may not be so easy. For example, even for Amazon, if it was so easy, it would have already cracked the finance market in US, right? But it hasn't been able to. So Amazon is able to take go toe to toe with Walmart in the retailing space or Target, but Amazon is not able to compete with a Goldman Sachs or a JP Morgan or a Visa or a MasterCard.
Yeah, Nishant,
Similarly, hold the thought 1 minute. Similarly, Amazon is not able to compete with all the large healthcare providers in the US, where there is a huge opportunity. That market is humongously big, or the student loan market, or the home mortgage market. Not even one of them Amazon has been able to crack, right? So there is something there, right?
So Nishant, I actually work with Amazon. So I would bring some insight to this discussion. It's about focus. And Amazon, if people think is an e-commerce company right now, they are so mistaken. It's a technology giant, right? Coming back to the question you initially raised, obviously there is a barrier to entry, but that doesn't mean that there are no competitors. So Ranjit, I think he's based in Germany. He knows how many fintech, especially if he's based in Berlin, how many fintech companies are coming out of Berlin and Munich. So my question is, the competitors who are already there, who have crossed those barriers to regulation and getting a certain amount of money, how is it that tomorrow they don't offer 1%? Because unlike Visa, they don't have 20,000 employees, so their operating costs are lower. How is it that they offer 1% to the same customer which is working with Visa right now? And that customer will definitely switch, trust me. That's how we used to acquire customers in the past. So that customer, if it is gone, Visa has nothing to integrate into. And that is what, again, my basic question is, how do you think these new, whatever, fintech or digital banks or those things will kind of impact? Yeah, sure.
I mean, I understand your basic question. See, that's what I think you're totally comparing two different things here. See, N26 is a bank and it's an issuer. Okay, Visa is a network. It issues its card. You have an MasterCard, you have a Visa card, you have an Amazon Amex card, you have a Discovery card, you have a Rupee card. These are networks, and N26 core business is banking. They are not into networking. You are again comparing two different things. That's what I was trying to answer, and I think we revolved around the bush, and we came to this basic question.
Mm-hmm.
Your comparison itself is totally wrong.
Okay. So what you're telling me from a technical perspective, I'm a finance background guy, so let me ask you this question. There is no one else who can build a similar network like Visa or MasterCard or Amex?
See, I just want to give a small thing. See, everything has a lifetime. Okay, every product has a lifespan, and whatever the product which is there tomorrow, it can become zero also. Okay, every time there is a competitor which is coming, and that is where R&D team comes in, and they are always into this. That is where all these salespersons and all they always interact with R&D teams, and every time there is a kind of workshops happens over there.
Okay. So guys, we are on top of the hour, so I will have to stop this discussion here. Amazing discussion.
Sure.
We will continue tomorrow. Okay. Arun is still here. I think the other guy he left, who joined for the first time. So yeah, so Arun, this is the format we follow. So basically, we were picking up few topics to learn. So we have done all the basic stuff like P ratios, PEG, etc., etc. And then we asked people to do presentations on a standalone basis. That wasn't very successful because only few people did it. So now we have kind of built groups. So then right now the group you are seeing is Ranjit is in Germany, Sri Hari is also in Germany, I believe, and Ishwar is in France. The three of them are in the group, and Vaibhav, he is in India, Ahmedabad. So the four of them are part of group, and they have built this, which looks really amazing. We have already covered this for 2 classes, and it will be continued tomorrow. Similarly, there is another team which has picked up Netflix. There was another team which picked up Eicher Motors, which was Akash. Nimit is not here today, and Venkat, I think. So and now this guy Raja is joining their team, and also Tushar. Tushar is also not here today, I believe. So these two have just joined the group a couple of weeks back. So I think hearing your comments and all, I feel you will be definitely a good value add to the group, and you will also learn a lot from the team. So I hope to see you in subsequent sessions. Anyways, we can connect offline via WhatsApp based on if you have any other feedback. So coming back to the session, Vaibhav did not join. So does everybody in the group understand stock lending borrowing, or people have questions? I was trying to explain in WhatsApp. I don't know how much you understood.
Nishan, maybe you can quickly summarize. I'm not familiar with that.
I'm not following the WhatsApp. No, there are so many messages, so I am not having time. So I'm not at all looking at WhatsApp messages.
I think this is
Nishan, can I try?
Sorry,
I want to try. Can I?
You want to explain, Shriyari? Yeah, sure.
I want to try. I don't know whether it's.
Yeah, sure. Go ahead.
Okay, stock lending, and I think you covered this in the initial one of the session. I'm assuming that. So I mean, these are my views. Maybe if something is not something you have to correct, you can correct. So what stock lending and stock borrowing is? There will be a kind of an financial institute who will purchase a kind of an bulk stocks from a certain company, and it will hold it for around a period of time. Either it could be 5 years or 10 years or 15 years or whatever period of time. And they did their fundamental analysis in such a way that they are sure that this stock is going to reach certain peak in certain number of years. That is what they have done strong analysis, and they are holding this stock. Okay, after certain number of years, in for example, they purchase this stock for 15 years period, and for example, after 2 years, the stock price has come down, and what this institute can do is it can lend its stock to another kind of an small institute, or kind of an small ventures, or some other institutions here for certain fees, which for example, for 1 year they will give this stock for certain fees. For example, if the stock price, for example, if they are giving some 1,000 shares, they'll tell that for 1,000 shares, give me a fee. For 1 share, give me a fee. For 1,000 shares, give me a fees of some 10 euros or whatever it is. So then for that 1 year, he will get that fees. So after that 1 year, the institution will get back their shares. It's just they will lend it to that smaller institution or individual institution or whatever we can say that party, and by this way they will be making the business case for this person who lends that share is they will get the fees, And anyhow they are holding this share for 10 years or 15 years because they have their own they have done their analysis. That is what the business case for the company which is lending the shares, and the business case for the institution smaller institution who is purchasing for him is, he thinks that he's selling the shares which he's not holding it. For example, he want to sell the shares, but he is not holding the shares here. So from his perspective, he feels that he want to buy at a lower price after the stock price has gone down. He feels that stock price is a huge now for example, if the stock price now is 40 euros, and after some time the stock price is 35 rupees, so he want to purchase this stock at 35 euros. So from his perspective, he is making a benefit of 5 euros over here. So this is what stock borrowing and lending, where the parties did their kind of.
I have one question here. Yeah, no, you said no. Okay, yes, the lender, yes, he gives it and he gets some kind of interest or for the period of time he gives or give letting it to somebody else or the small investors. Small investors gets what his return. Okay, yes, he receives it for lesser price. No, but during that period, if any dividend comes, so that will be that will goes to that borrower, right?
That technical part I don't know into that detail.
Dividend always goes to the lender. So like I explained, this is like giving your house to rent to someone. So you get rent, right? You call it rent. Here, like you said, instead of interest, we call it fees. So the concept is simple. The borrower is a guy who believes the share price will fall. So if the current price is 100, he thinks I will sell it today and after 6 months I can buy it at 80. So I will make 20% profit out of 80. So out of 20 profit, maybe 2 rupees is my brokerage and another 2 rupees is the fees. Still 16 I will make. So that is the borrower's business case. The lender's business case is he has bought it at 30 rupees and his horizon, they are known as long only funds. So these are pension funds or sovereign wealth funds where they are going to buy and hold for 10 years. So they have bought it at 20 rupees and they are thinking that this will go up to till 200. So
sorry, Nishant, can you explain? I'm not getting what is how the borrower gets benefited or his business case. I couldn't follow you.
So I am the borrower, right? I took the shares from you and today the price is 100. I will clear.
Okay.
I will sell it today at 100 and I am assuming obviously, right? Market is more like a calculation or a assumption or whatever, right? Based on the research I have done. I believe in 6 months time, this share will be at 60. So if it falls, I make that profit. If it doesn't fall, I don't make the profit. I suffer a loss. Simple.
No, you're taking okay. So example, I have that a share. I bought it for 50.
Forget your case now. You are asking about borrower. So forget your price and all. So you have 1,000 shares. I took it from you. Okay. So.
Right. Okay. Right. Okay. What price you took it from me?
I did not pay you any price. I have just borrowed it from you. I will pay you only 5 rupees per share as fees. That might be paid quarterly or yearly or in advance, whatever. So say I took 1,000 shares and based on the current share price, say assuming it is at 100. So we agree on a fees of say 4 rupees per share or 5 rupees per share, just for easy calculation. So we agreed for a fees of 5 rupees per share. So I will pay you 5,000 rupees. And this is for 1 year. Now this 5,000 rupees is for 1 year. I may continue to hold this for, yeah, whatever. So say the agreement is for 1 year. And now out of this 5,000, I may either pay you quarterly or say one amount in advance and then every quarter, whatever is the arrangement. It's like taking somebody's house on rent, right? Same thing.
Okay, but what will you do with it? How you earn money?
Exactly. So that is what I'm saying. So now I took it from you, 1,000 shares. Current price is 100. I will sell in the market. So the moment I sell, I will get 1,000 into 100, 1 lakh rupees. I will keep that 1 lakh. I will utilize that 1 lakh to either buy some other share or get interest or whatever. Okay. But the whole objective is that I sold it at 100, right? I want to buy it back at 60 or 70, whatever. So that after paying the fees to the lender of 5 rupees and brokerage of 3 rupees, I still make a profit.
If it goes down, okay, right. But if it goes up, then you will lose money.
Exactly.
Yeah. Okay.
Reverse, right? Similarly, when you buy, you feel it should go up. If it goes down, you lose money, right? It's
Yeah.
same
Yeah.
thing.
Yeah.
So that is what is called short selling. So basically, short selling means you cannot just take a position without delivering the shares. So to deliver the shares, you have to borrow it from someone. So first you need to find someone who's ready to lend you at that price, and whatever the fees has to be agreed and all that. So generally that there will be a third party who will arrange this, and the third party will charge a commission to both the borrower and the lender. And this is a very big market.
Nishant, I don't. Recently, this rules has been introduced by SEBI, right? Is this everything is possible in Zerodha portal itself? No.
No, this is not. These things are not available for retail investors. Yeah, these are large institutional investors can only play in these markets. These are not for us. So I doubt you can do this, taking a short position. But you can talk to your broker if they are offering that service.
Short position can be taken in Zerodha also, right? Not in
I
the
don't
cash
know.
market. The options it's possible.
Options you can do anything. Yeah, don't talk about options, right? Here we are talking about cash market. Don't confuse people. Right now we are discussing cash market, not options, right? Options, futures have different rules anyways. Options, so you can, why you need all this? You can just buy a put option, right? If the price goes down, you make money. That's it.
But in the equity also, in the cash market also, let's say if without buying the stock, you don't need a stock to present in your demat account. You can still short your position, not going to the position. Take the stock in the open market itself. You can start selling that product.
No, but when you short it, you have to cover na intraday. This is long term. If you don't cover,
Yes,
what
in
will
intra.
happen? Today, if you sell
Uh,
something, today you sell 1,000 shares of Infosys and don't cover, what will happen 2 days later? How will you
I'm
deliver?
talking about intraday only.
So here we are talking about delivery, na? Understand the what we are talking. So here you are basically taking a position that in 2 months the company share will go down. Like for example, somebody could have sorted Tesla, right? At whatever price. So Venkat, this will answer your question. Say 1 month ago somebody sorted Tesla at 800, or 2 weeks ago, today it is at 600. They made $200, right? For 1 month the lending charge will hardly be $2 or $3.
Okay.
So this guy
Okay.
has
Now
made
they will buy back and give it to the lender.
exactly. And whatever dividend, whatever comes belongs to the lender. So the borrower is just like taking your house on rent. Yeah, so you have taken my house on rent. You are paying me usage charges. Similarly, you have taken his shares on rent. You are paying him usage charges. So when you borrow cash from someone, you pay interest. When you borrow shares from someone, you pay interest, but it is known as fees. They change the word. When you take somebody's house, you pay rent. They use the word. It's a concept is same. You are taking someone else. The owner is someone else. You are just using it. Pay per use. Slowly, the whole world is moving in this model. Everything will be like that. The way it is going, even relationships will become like that, I believe. They've become to some extent, but I think the end game is there only. Any other question, guys?
Nishant, just a small question to you regarding. I always see when you say Indian government will do for free. Do you think